Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, I hope you had a great 4th of July, a lot to celebrate, and a safe one as well. Well, we're going to be looking at gold. Has the gold train left the station? Yes, it has. It started actually all the way back here in early January. You can see it's took off and moved steadily to the $1,300 level, and then it collapsed back down to 1,200, a big drop in anyone's book, and then back up to 13, back again, and then finally a breakthrough. Now this is what we want to look at, because this is what makes gold so interesting right now. Here's what we've been looking at for quite some time, and that's this $1,300 level. We talked about it. There was a breakout right there. The level right here is about 1204 on the downside, and this is 1,300. So just flipping this over, like right here, like this, takes us to around 1,400. I would say between 1,390 and 1,400. That's the next stop on the gold train. And we are very overbought. Not to say we can't go higher, but I would suspect once we get to these levels, we're going to see some sort of pullback. Now the gold is higher today, but it's been steadily moving higher pretty much all year. For the first 6 to 7 months of the year, it's likely to have some pullbacks, not to be unexpected, but generally speaking, gold is going to go higher. And if we take this off the screen and look at a bigger picture, what we're looking at before was the contract, the August contract for gold. This is the spot gold market. As you can see, we almost hit $1,900. We almost was going for $2,000. Everybody was excited about $2,000. Didn't happen. Big 4-year correction, and now, just on a Fibonacci retracement level, we can get up to the almost the $1,600 level on a 61.8% pullback. 50%, I think 1,500 is definitely in the cards in this market longer term. So let's see how that plays out. But generally speaking, the gold train has left the station and it's going higher. Here are some stocks that you may want to take a look at. The gold mining stocks is Newmont Mining, symbol NEM, Gold Corp, and of course ABX, which is our favorite here. So you can see all of the trade triangles, all very positive on gold. It's going higher. This is crude oil. As you can see, it's pretty much going sideways. Really no strong direction. Even when we put our trade triangles in, you can see we have a mixed picture there. Longer term, the monthly is positive, but we trade crude oil based on the weekly and daily, and they're both negative, indicating a trend. And that kicked in, you can see that just kicked in on today, as a matter of fact. So looks like we're going to test the lows around 4,600 again, or $46 again, and we are below the 50 line, indicating further weakness. Looks like this is the Dow. It looks like we're going to see a little bit more of a two-way action today, certainly on more on the downside. Look at this rapid rally. I mean, this is just insane trading. I mean, to trade and catch these moves, you have to be more than lucky. We are over the 50 line, which is a good thing, but generally speaking, our weekly is still negative, indicating you should be out of this market, and very, very timely as well, because look at these swings. This could give you a heart attack in a New York minute, but let's see how things play out today. The market is expected to be lower. I think we're looking at a situation where the indexes look to be, about 0.5% lower on the opening. So let's see how that plays out. A little bit different picture on the NASDAQ. You can see we have a monthly and a weekly negative. The daily, don't pay attention to that, because we really pay attention to the weekly and the monthly, but they're in coordination here. That's not a good sign. Plus 55 is more of a trading range, but nonetheless, it's a little bit of a different picture in the NASDAQ compared to the S&P 500 and the Dow. So really, this is the one I think is the weak one out of the 3 indexes we track. Pretty much the same picture on the S&P 500 as we have on the Dow. We have resistance, it stopped, that's where it stopped. We're due to open lower, probably about 0.5% lower. And whether that continues for the rest of the day is a good guess. But my guess is we put in, this is the resistance continuing to build up in this market. And some catalyst, whether it's Brexit or something else, is going to push it to the next level, either on the downside or the upside. But for the most part, I'd rather be out of this market, on the sidelines looking in. There's much better markets to trade, like gold, for example. So take a look at those gold stocks we talked about, and if you have any questions, please leave them on our blog. We'll be happy to answer them for you. Have a great trading day, everyone. It's going to be a fun summer.